Hey, everybody, welcome to this week's Wall Street Winners for April the 16th, 2018. It goes way too fast, coming to you since 1995. This has been coming to you, God, it seems like forever. All right, let's take a look at the markets here. Lots of stuff happening. Now, what we're doing is we're seeing a grinding higher market, just as I predicted before. We sniffed out the old lows from February, and then we've rebounded. But this is an awfully weak rebounding. There's two factors on this chart I want to draw your attention to. The first one is bullish. The purple predictor is up at the top, showing that the smart money is still buying. They use this dip in the marketplace to add to their positions. So smart money is big money, and big money became big money because they were smart money. Got it? Okay. Now down at the bottom, though, volume analysis shows that this rally that we've had over the last 2 weeks is weak and unsustainable. You see, volume has to confirm price action. And on this rally, you can see that the volume has been slowly but surely going down, thus confirming that this is not a bull market. This is just a rally in, well, let's call it a bear trend, but maybe a trading range. But the point is, this rally is not sustainable. Now let's look in the upper right-hand corner there at our ADX indicators there. The red line is above the green line, which shows that there is still more selling pressure in the market than buying pressure. The only thing positive there is that the selling pressure, the red line, is drifting lower, and the green line showing buying pressure is stable. So we're narrowing the gap and therefore suggesting we're going to stay in a trading range, but with maybe a slight bearish bias. Now, the NASDAQ, similar situation, strong purple predictor. The volume said the same story. Now, seasonality, our seasonality indicator, I keep making these mistakes. It's not, well, okay, so I said it was bullish because we broke, I guess it's a month ago now, we broke up to new highs. Now, 4 days ago, it did break below the 148 level that I said would turn me bearish, but we've rebounded above it. In other words, we spiked below it and came right back up. So I'm going to say that we're still on a bullish signal, but boy, look at Friday's price action, and that suggests that we're going to go down and break the low that we made early last Friday. So, I got to say it's bullish, but not really. Now, if it breaks below that 147 level, then definitely we have to turn. If it closes down there, we definitely have to turn it to a bearish signal. Okay, seasonality patterns suggest that we're going to drift lower, choppy, sloppy. No big deal, but a slightly bearish trend through to September or October. Yield curve not giving us a lot of clues, but it's capping the market as well. So is a pattern developing here? Yeah, we're not in the midst of a bull market, but really we're not in a bear market either, although we might drift lower or stay in this big trading range. That's what I think is going to happen here. Okay, we'll get to trading strategy later. Our asset allocation shows that money is flowing out of the stock market into the bond market. Now stop and think about this. Smart money, the purple predictor is telling us that smart money is coming into the stock market, but money in general is flowing into the bond market. Got it? Okay, now you know why things are moving. You're here at Wall Street Winners because you want to see the unique information that tells you what's really going on. Stock market risk indicator, stable. Global shares, boring. Bonds, you can see they're in a slight bull market, which I look for to continue. But let's take a look at the fact, because we know there's cash going in there from out of the stock market. Our bond key factors, now look at this. They changed quite a bit here. So the top green line is the bond yields, and you can see they kind of poked up a little bit. Underneath that is the gold line, which is gold, which has basically been stable. So let's call it a neutral. The thing that was really putting the pressure, the downside pressure on interest rates was the blue line, which is 10-year treasuries in Germany. But notice they kind of hooked up a little bit, not enough that we can start to say, oh, definitely it's a bull move. But nonetheless, they stopped going down. But down at the bottom, the chart itself shows that the CRB popped up. So the pressures on bond yields to go down have abated. They're no longer there. So we may see this market once again stabilize. Let's go back to that chart. Notice how we're really at the same price we were 2-3 weeks ago. So it looks to me like bond yields are going to stabilize around these levels, and that's not bad. That's okay. I just don't want to trade the bonds. That's all, because they're boring. Okay, the dollar, if the interest rates are stable, then we're going to probably see the dollar stable, and indeed it is stable. And that probably means that gold is going to be stable as well. Although with the pop-up in the CRB, we might want to take a slightly bullish approach to gold. So not a strong bullish position, just a weak bullish position. We did see the market pop above the top of the range on Wednesday, but it came right back down. But look for it to sluggishly move to new highs this week. Our indicators for gold kind of turn slightly bullish or neutral, and that's one of the reasons why I'm turning slightly bullish or neutral on the gold market. Oil, as I mentioned, I'm sort of getting to be slightly bullish here. Demand going up, supply going up. It's just that it looks like demand is going up and supply faster than than supply is going up. Bitcoin did exactly what we said. It would break through that downtrend line. I think that we'll rally just a little bit further, not too much more. Maybe we can get up to 8,500 on Bitcoin. I'm still looking for a move to below 5,000 though. So I think probably this little mini rally that we're in is really just setting up a sideways trading range between the highs we made up at 10,000 and the lows around 6,500, something like that. Eventually we will get down to 5,000, maybe 4,000, because we need to choke off the supply of Bitcoins. All right, everybody, that's it for me this week. For all you freebies, love having you here, but of course you know what the cool people are doing. They're really subscribing. All right, let's get over to our fully paid up members. Hang in there for just a second.